Welcome back to another video where today we're going to uncover the best dividend paying stock in the utility sector. Both of these companies have made it all the way through the bracket, and today they're going to battle it out for that utilities crown. The winner is going to be the stock with the most points out of 10 possible points and revealed at the end of the episode. Now let's take a quick look at the criteria these stocks were judged by, and remember to hit that like button to show your appreciation for the hard work that goes into these videos. So the first competitor is Algonquin Power and Utilities Corp, stock ticker AQN. So AQN is a company within the multi-utilities sub-industry and industry of the utilities sector. Founded in 1988, AQN owns and operates a portfolio of regulated and non-regulated generation, distribution, and transmission utility assets. It operates in two segments: Regulated Services Group and Renewable Energy Group. For more information on AQN, I posted their website in the description down below the video. And their competition for the utilities crown is Next Era Energy, stock ticker NEE. So NEE is a company within the electric utilities sub-industry and industry of the utilities sector. Founded in 1925, NEE generates, transmits, distributes, and sells electric power to retail and wholesale customers in North America. The company generates electricity through wind, solar, nuclear, coal, and natural gas facilities. For more information on NEE, I've linked their website in the description down below the video. All right, first up, we're going to look at the market cap. Company A has a market cap of $8.62 billion compared to Company B's market cap of $164.98 billion. Here's the chart for the visual representation of the difference in market cap. Jumping into the first category where we are going to award points, we have growth. And the first thing we look at in growth is the revenue year over year. Company A has a revenue year over year of 22.3%, and Company B has a revenue year over year of 3.9%. Company A has a revenue 3-year CAGR of 15.57%, comparing that to Company B's negative 0.68%. Bringing your score after the growth section of 2 points for Company A, 0 points for Company B. Next up is profitability, specifically the gross profit margin. Company A has a gross profit margin of 39.56%, and that's compared to Company B's gross profit margin of 45.63%, which brings your score of 2 points for Company A and 1 point for Company B after the profitability section. Next up is momentum, and here we look at the percentage off of the 52-week high. In theory, the higher the percentage off of the 52-week high, the better the discount for a quality company. Company A has a 52-week high of $16.01 with a current price of $12.59, bringing them 21% off of their all-time high. Whereas Company B has a 52-week high of $93.73, a current price of $81.87, bringing them 13% off of their all-time high, and bringing your score after the momentum section of 3 points for Company A and 1 point for Company B. And before we get to the best category, the results and grand reveal, remember to hit that like button to show your support on the channel. And also, don't forget to subscribe and ring the bell so you guys get notified every Monday and every Friday when I post new dividend-related content. Lastly, use that comment section down below the video and let me know your favorite dividend-paying stock in the utility sector and why. But now, let's get to that dividend section. So jumping into dividends, the first thing we look at is the forward dividend yield. Company A has a forward dividend yield of 5.67%, and that's compared to the 2.03% forward dividend yield from Company B. Company A has a forward annual payout of 72 cents per share per year versus the $1.70 per share per year from Company B. Company A has a payout ratio of 94.88%, and that's compared to the 59.78% payout ratio from Company B. Company A and Company B actually tied with their 1-year dividend growth rate of 10%, so no points are awarded to either company for this category. Company A has a 5-year dividend growth rate of 10.01%, and that's compared to the 5-year dividend growth rate of 12.1% from Company B. And Company A has a 10-year dividend growth rate of 9.51%, and that is compared to the 10.84% 10-year dividend growth rate from Company B, which brings your score of 4 points for Company A and 5 points for Company B, keeping in mind we didn't award any points for that 1-year dividend growth rate since they tied. And the moment we've all been waiting for, Company B is actually Next Era Energy, stock ticker NEE. So looking at the graphic on your screen, you guys can see that the performance of NEE over the past 10 years has been more than deserving of the utilities crown as they beat their competition and the S&P combined over that time frame. Again, and always remember that this is not only subject to the metrics I chose to use, but the date and time I completed my research, which was open market on September 23rd. But with that being said, NextEra Energy has proven to be the best dividend paying stock in the utilities sector. If you're underweight in the utilities sector and looking for a place to start your own research, NEE might be a great place to start. So with the completion of this video, we have now covered all 11 sectors in the stock market, and we found out who is the best of the best. If you're interested in seeing all 10 of the other winners, make sure you guys check out this playlist. But until next time, see you.